All right, ladies and gentlemen, Work Together 13.2 is turned on and available for you. So on Friday, if you can remember back, we talked our first time about payroll and journalizing actually using debits and credits. Otherwise, the previous chapter, chapter 12, all we did is calculate earnings, calculated deductions. Then we also went through and did our employees' earnings record and wrote out checks. That was really what was chapter 12. And chapter 12 was all on its own. We had never done anything else like it before. And I had some people that were pretty gosh darn successful on that test. So that helped a lot of people out when we put that test score in for you. So 13.1 was going through and journalizing it. So we used the account salary expense to account for your total earnings on your payroll register. And then we had to go through and list all of your deductions. And the one deduction that students tend to struggle the most with is going to be you had federal income tax, and you don't have an account called federal income tax payable. We have an account called employee income tax payable. And we listed all of your liabilities. Those would be listed as a credit, and then you're going to have a one cash account. Cash is going to be affected once on the very first line, and that's going to be equal to your net pay. That's really what 13.1 was. It didn't take us very long. I did give you your outline last week as well for Chapter 13. I picked a due date of this Friday for it, but we will not get through this Friday with a snowstorm on Monday and then not having classes on Wednesday. So I did move that date on in classroom, as well as you can see the tentative date that I have scheduled for the test when you look in Amplia, which I believe is next week, which we don't have school. Just realized I scheduled it that day. We'll see what will happen on that one. But that's easy enough for me to change, just down the road. But that's what I'm looking at would be next week for the test for this chapter. So 13.2, we have 4 taxes an employer pays because they have employees. Okay, so the first thing we did is we went through and recorded just the fact that we paid employees. Now we have to go through and record the fact that our employer has four taxes, and those taxes are Social Security, Medicare, federal unemployment, and state unemployment. You will find that there are tax bases on all of those. We talked about a tax base in the last chapter because once somebody's earnings goes over a certain amount, they no longer need to pay taxes. Now, we're going to do the same thing for our 4 employer taxes for Social Security and Medicare because there's a tax base on there, but there's also a tax base for unemployment, and our tax base for unemployment for this assignment is going to be $7,000. So are you going to have a lot of employees exceed that tax base? What do you think? At $7,000, do you think you'll have a lot of employees that would go over that tax base? Once they earn more than $7,000 in a year? Yes. In January, February, and March, maybe not. But once you get close to December, and you're looking at November and October, you're going to have a lot of employees that have already earned more than $7,000. So you no longer need to calculate and pay unemployment taxes on them. So you do need to watch out for that and be aware of what everyone's accumulated earnings are to determine whether or not you have to pay taxes on them. So when we take a look at this, we have 2 pieces of information in our directions. We have Tamala's and Irma's accumulated earnings as of April 30th. We have 5,100 and 7,350. So once I see that number over 7,000, that should be like, ooh, that's kind of important to me. And then we also have what their earnings are for this pay period. So what we need to do is we have to go through and calculate the amount of earnings subject to unemployment taxes. So this little table that they gave us right here in 13.2 is not going to be a formal form that you would fill out when doing paperwork, but it'd be something that you would have to just calculate. So we know up to $7,000 is what we need to pay for our unemployment taxes. Has Pamela earned more than $7,000? No, she has not. So if I take on my calculator 5,100, which is her accumulated earnings, and I add $637.50, I am still under $7,000. So all of Tamila's earnings, $637.50, are taxable. How much of Irma's earnings are taxable for unemployment? This is where we see whether or not people are listening to what I just said. What's our tax base for unemployment taxes? $7,000. When somebody earns more than $7,000, do we pay taxes on them? So how much of Irma's earnings are taxable? 0. Shazam wham. Okay. Now, I have to add up the total earnings from May 1st to the 15th. So I'm going to go ahead and add my $637.50 for Tamila and my $920. And the total earnings is $1,557.50. Now, my unemployment taxable earnings, I have $637.50 plus 0, which is going to give me $637.50. These two pieces of information here are important. Again, you are not going to have this table on your test, but you're going to be expected to know how to do this. $1,557.50 is the total earnings of all employees. $637.50 is the amount of earnings that can be taxed for unemployment for people that have earned less than $7,000. When I look here, these are my 4 employer taxes: Social Security, Medicare, federal unemployment, and state unemployment. You will notice to the right of these, they have our percents. Social Security and Medicare are going to be taxed on the total earnings because nobody has exceeded the tax base for Social Security and Medicare. Unemployment tax payable federal and state are going to be taxable just on this $637.50. So you're going to take this number and multiply it by your percents to get your individual amounts for your account. So I'm going to start with my $1,557.50, and I'm going to multiply that by 0.062, and that's going to give me my Social Security tax. When I calculated, I got $96.57. Agreed? Okay. In my calculator, again, I'm putting $1,557.50. I'm going to multiply that by 0.0145 for my Medicare. And Ben, what did you get for that? Yes, $22.58. Now, my federal unemployment tax, I want you to notice something because half of you are going to do this math wrong. My percent is 0.8%. So if I put this in my calculator as a decimal, what does it go in as? 0.008. I have to move my decimal 2 to the left. So it's 0.008. It's a really, really small number. If you use your percent sign, you still put in 0.8 and then percent. So I'm going to put in there my calculator $637.50 because I'm using just the taxable earnings for unemployment times 0.008. How much did you get, Cody? Nope. $5.10. Bless you. Try it again. Cody, did you use $637.50? Or did you use the $1,557? We have that $637.50 again. I'm going to multiply that by 0.054. And I'm getting $34.43. Is that from Dr. W? Okay. Did you guys agree with my state taxes? Now here's the thing. Always make sure that your federal taxes are less than your state. Because if you put this in incorrectly and you're like, oh yeah, that's 8%, that would make your state taxes larger, or excuse me, your federal taxes larger than your state, and that can't be the case. If somebody ever has to file for unemployment and they get an unemployment paycheck, that check always comes from the state that they live in, not the federal government. So therefore, you should remember that the amount that goes to the state government should be higher than what goes to the federal. Now, the next thing that I need to do is I'm going to go through and take these four numbers and add it up, and those four numbers are going to be the total taxes that the business has to pay because they have employees. I got 158.68. Can anyone agree with me on that one? Oh, I got some head nodding. Awesome. All of this work I did up here is just to calculate my taxes. Now I need to journalize it. So when I look at my directions, we are now to instruction number 3, journalize the employer's payroll taxes of May 1st to the 15th on May 15th of the current year, and we're going to use memorandum 46. So I'm going to put in May 15th. My account title that goes first is payroll taxes expense. Payroll taxes expense is always the name of the account that we use to record the fact that we have 4 taxes that an employer pays. Source document is M46. My payroll taxes expense is going to be 158.68. That is that total amount that we just added up. What I'm going to do next, after I put in my payroll taxes expense of 158.68, is I'm going to list my individual taxes, and I'm going to do Social Security, Medicare, unemployment federal, and unemployment state in that order. The name of your unemployment taxes is unemployment tax payable federal and unemployment tax payable state. Be careful because it's really easy to choose the incorrect one and then Applia says and marks it all wrong. Go ahead and try that on your own. All right, you guys ready to take a look at application 2 with me? Think everyone's ready to go? Now, application 2 is very similar to what we did in Work Together on Your Own, except that we have 2 payrolls. And you need to do them in 2 separate parts. So the first thing that you have to take a look at is just accumulated earnings March 31st, April 1st through 15th pay period, and unemployment tax earnings. Ignore the rest of this, okay? What we need to do is we have to figure out which employees have earned more than $7,000, because if they've earned more than $7,000, then we don't pay unemployment taxes. So let's take a look at Frank. Has Frank earned more than $7,000? How much of Frank's earnings can we be due unemployment taxes on? All of it. So I put 810 here. How about Beth? All of it. Teresa? 0. John? All of it. Laura? All of it. Ian? 100. Do you see that? Because Ian is at 6,900. So therefore, Ian we're going to have $100 of that be taxable. Then you add up and you get your two numbers and you work and you do exactly how we did on the first application problem. Now, the next part that you need to do in order to do the next one is you have to get your accumulated earnings. How do you get accumulated earnings? Add the two together. So you have your accumulated earnings March 31st plus their total earnings. So I'm going to have $4,860 plus $810 is going to give me my accumulated earnings here for Frank. And I would go all the way through there. And then you would repeat. Now, you will watch out because Beth, you're going to have partial earnings just like you had for Ian for the second pay period. And then you just go through and journalize them. Have fun.